because that's exactly what the budget chairman, who's a member of this committee, Senator Whitehouse, just found a couple of days ago with respect to the House Republicans. Senator Warner's next.
Thank you, Mr. Chairman. And Madam Secretary, it's great to see you. And let me commend my dear friend from Colorado. I've always noticed, Senator Bennett, what you do, and I think you raised great issues. And I think about one of the first gangs that you and Senator Crapo and I and others on Simpson Bowls wasn't perfect, but man, we'd be a heck of a lot further down the path if we had taken that. Let me also mention, I want to talk something I think that's not been raised on the banking issue, and I want to join a lot of my colleagues. I think you, the Fed, the FDIC moved very aggressively. I think the potential downside risk for businesses across the country, for other medium-sized banks across the industry, could have been a disaster. And I think the actions you took were bold and stepped up and shored up the system. And I'm of the belief that, echoing what Senator Bennett said, that traditional prudential regulation should have caught this. Where was the bank management? Where was the regulators, both state and federal in the case of SVB, that didn't get this interest rate mismatch caught much earlier? But the one thing, though, that I worry about, whatever regulatory system we had in place, the other half of what happened, that happened sometime between Tuesday and Thursday afternoon, where we've seen now the very first social media, internet-based bank run. To put this in any kind of comparison, when WAMU failed, the largest bank failure in our country's history, $16 billion coming out over a 10-day period. I'm not sure what regulatory system anywhere, no matter how much capital, no matter how many stress tests, that would have protected any institution from a $42 billion bank run in a single day. That literally at that point was 25 cents on the dollar of every dollar that was deposited. I think most of us have all seen It's a Wonderful Life. We realized that that money was off in small businesses and startup businesses around the country. Question I have is, who was playing the role of Mr. Potter? I think there were some, and I've been supportive of the venture capital community. I was a venture capitalist before, but I think there were some bad actors in the VC community who literally started to spur this run by virtually crying fire in a crowded theater in terms of rushing all of these deposits out. And I'm not sure that we have anything in our existing regulatory structure, and it's early on, and we need to figure out what happened and who missed this, but this notion that 25 cents on every dollar can rush out in a single day, and people who spur this online Tuesday and Wednesday night bear no responsibility, and the hypocrisy of some who are libertarian until the stuff hits the fan and then want relief is frankly more than a little repugnant. So early on, this is not normally within the traditional banking regulatory, but I think this will go down as the history's first internet-driven run. You have any initial thoughts on this?
Well, no matter how strong capital and liquidity supervision are, if a bank has an overwhelming run that's spurred by social media or whatever so that it's seeing deposits flee at that pace, a bank can be put at danger of failing. Of course, there's backup liquidity, there's the Fed's discount window, but this can be a threat to banks. And one of the reasons we intervened and declared a systemic risk exception is because of the recognition there can be contagion in situations like this, and other banks can then fall prey to the same kinds of runs, which we certainly want to avoid. But this was a bank that had a very high ratio of uninsured depositors. Insured depositors and retail customers are usually do not run. We tend not to see runs among insured depositors, but the liquidity requirements and needs of a bank with such heavy reliance on uninsured deposits that are runnable, I think we need to think about that.
And I agree, and you know, in a complete concentration in an industry sector, but the notion, and again, I don't have a solution in mind yet, but the idea that there is no responsibility for the equivalent of shouting fire in a crowded theater, and forcing that run, using technology as a mechanism to accelerate that, you know, presents a problem that I hope we could all kind of put our heads jointly together on. Thank you, Mr. Chairman.
Thank my colleague. Our next three